What if one of the biggest leaks in your business is not theft, waste, or bad pricing? What if it's money quietly leaving your business because you do not fully understand your deductions? That may sound dramatic, but for many small business owners, it's true. They work hard, they serve clients, they buy supplies, they pay for software, insurance, mileage, equipment, training, internet, professional help, and business meals. Then tax season arrives, and the question becomes, what can I deduct? By then, the better question may have been missed. The better question is, how should I have been thinking about these expenses all year? That is where many business owners lose clarity. A deduction is not just a tax break. A deduction is a way of telling the financial truth about your business. It says, this is what it actually cost me to earn this income. That matters because gross income can make a business look successful, but net income tells a very different story. Net income shows what is left after the real cost of doing business. And if you miss legitimate deductions, you may pay tax on money your business never truly kept. The Georgia Peach Income Tax Source document makes a powerful point. Expenses that are both ordinary and necessary for your trade or business are generally deductible. That includes many everyday costs, such as home office use, vehicle mileage, equipment, and professional fees. But the deeper issue is not only knowing the list. The deeper issue is learning to think like a business owner. So the central question today is this: are your deductions simply something you collect at tax time, or are they part of a smarter financial strategy for the business you are building? And that's what we're unpacking today. Hello, I'm Jovi Cherie Brown, and welcome to the Sweet Spot Tax Podcast. In each episode, we take a deep dive into a Georgia Peach income tax sweet spot source document written by me. Guided by brief musical transitions, we'll explore 5 key areas: the deep dive, the psychology behind it, the sweet spot shift, actionable takeaways, and the clarity check. Along the way, we'll expand on the source document and explore the ideas, strategy, and questions behind it. Our goal is simple: to take complex topics and break them down into clear, practical ideas that are easy to understand and apply. Whether the topic is tax strategy, business growth, financial clarity, navigating IRS challenges, or decision making, the objective remains the same: to help you think more clearly and move more intentionally. Let's align with your sweet spot and begin today's deep dive. Let's dive into this. Small business deductions begin with a simple idea. If an expense is ordinary and necessary for your business, it may be deductible. Ordinary means it is common in your kind of work. Necessary means it is helpful and appropriate for your business. It does not have to be fancy. It does not have to be perfect. It does not have to be the kind of expense another person would choose. But it should make sense for the business you are actually running. A photographer may need camera equipment. A consultant may need scheduling software. A real estate investor may need bookkeeping support. A healthcare operator may need compliance tools, professional licenses, and staff training. A speaker may need a website, travel, and marketing. The deduction is not just about the item. It is about the relationship between the item and the business. That is why 2 people can buy the same thing and get different tax results. A laptop used mainly for client work may be a business asset. A laptop used mostly for family movies, personal shopping, and schoolwork may not be a fully deductible item. A vehicle used to drive to client meetings may create a business mileage deduction. A vehicle used for regular personal errands does not become deductible just because the owner also owns a business. A room used only and regularly as a home office may support a home office deduction. A kitchen table used sometimes for work and sometimes for dinner does not tell the same story. This is where small business deductions become more than tax rules. They become a test of clarity. The source document lays out a strong deduction review process. Identify, record, allocate, review, and claim. That process is simple, but it is not small. First, identify the expenses that truly belong to the business. This requires you to understand your business model. How do you earn money? What tools support that income? What services help you deliver value? What costs help you market, operate, protect, or grow? Second, record expenses as they happen. This is where many business owners fall behind. They plan to clean everything up later. Later is when the business purpose becomes harder to remember. Third, allocate mixed use expenses. This is important because many modern business expenses have both personal and business use. A phone may be used for clients and family. Internet may support business work and household streaming. A vehicle may be used for business trips and grocery runs. The goal is not to pretend everything is business. The goal is to be honest and strategic. Fourth, review the rules. Some deductions have limits. Some have phase outs. Some depend on timing. Some depend on how your business is structured. Equipment, vehicle, meals, retirement contributions, health insurance, and the qualified business income deduction can all require deeper planning. Fifth, claim deductions strategically. This means deductions should not be an afterthought. They should be connected to your return, your books, your entity type, your cash flow, your long term goals. Now, let's make this real. Imagine a small business owner who earns strong revenue but keeps weak records. She pays for software, advertising, mileage, meals, training, and office supplies. But everything runs through one personal credit card. At tax time, she scrolls through 12 months of transactions trying to remember what was business and what was personal. She is not careless, she overloaded. But the result is the same: stress, missed deductions, and uncertainty. Now imagine another business owner with the same income and similar expenses. She uses a business bank account. She keeps receipts digitally. She tracks mileage during the week. She notes the business purpose of each meal. Each month, she reviews her numbers. Same tax law, different behavior, different outcome. One person experiences tax season as a search mission, the other experiences it as a review. That difference matters. Operating expenses are often the easiest place to begin. These may include software, advertising, legal fees, insurance, office supplies, web hosting, bank charges, and contractor labor. These costs often support the daily function of the business. Vehicle expenses require more care. You may use the standard mileage deduction or actual expenses depending on the facts. But the key is tracking. Track date, destination, mileage, and business purpose. They all matter. Home office deductions also require discipline. The space should be used regularly and exclusively for business. A clear workspace tells a stronger story than a flexible household space that changes from hour to hour. Meals and travel require context. A receipt shows what you paid. It does not always show why the meal or trip was business related. Writing down who attended, what was discussed, and how it related to the business can make the record much stronger. Equipment and property can create major planning opportunities. Computers, furniture, machinery, software, and certain vehicles may qualify for depreciation, Section 179, or bonus depreciation. But timing matters. The asset usually needs to be placed in service during the tax year. Owner level deductions can also be powerful. Self employed health insurance, retirement contributions, and the qualified business income deduction may reduce taxable income while also supporting long term wealth and stability. That is the hidden opportunity. Deductions are not just about lowering this year's tax bill, they can reveal how your business uses money. They can show whether your systems are clean. They can support cash flow. They can help you build wealth. They can help you make better decisions. When you understand deductions, you do more than prepare a better tax return. You begin to understand your business more clearly. So, what's the psychology behind it? Many business owners do not miss deductions because they are lazy. They miss deductions because they are busy, stressed, and mentally overloaded. Running a business requires constant decisions. Who should I serve? What should I charge? What clients need attention? What bills should be paid first? Should I hire more people? Should I buy equipment? Should I take the opportunity or wait? With so many decisions, record keeping can feel small, but small habits create large outcomes. The brain loves delay when a task feels boring, unclear, or emotionally uncomfortable. That is why a business owner may say, I'll organize my receipts later. Later feels safe. Later feels easier. Later feels like a plan. But later often becomes a pile. That pile creates stress. Stress creates avoidance. Avoidance creates more stress. And then tax time becomes emotionally heavy. There's also a mindset issue. Some people still think like employees even after they become business owners. Employees often receive a W 2, and many expenses are handled by the employer. Business owners must think differently. They are responsible for tracking income, expenses, taxes, tools, risk, and growth. That shift is not only financial, it's psychological. You have to begin seeing yourself as the operator of an economic system, not just a person who does the work, not just a person who owns money, but someone who owns decisions, records, cash flow, and strategy. This can feel uncomfortable because clarity removes hiding places. When the books are clearer, you can see whether the business is truly profitable. You can see whether your pricing works. You can see whether your expenses support growth or simply follow impulse. You can see whether you are investing or just spending. That level of clarity can be freeing. It can also be confronting. This is where emotional intelligence matters. Can you look at your numbers without shame? Can you separate a mistake from your identity? Can you build a better system without criticizing the version of you that did not know better? Can you ask for guidance before confusion becomes a crisis? Good tax strategy is not only about math, it is about behavior. A separate bank account is behavior. A mileage log is behavior. A monthly bookkeeping review is behavior. A note on a meal receipt is behavior. A year end planning meeting is behavior. Over time, these behaviors create confidence. They lower stress because your brain no longer has to carry every detail. The system carries the detail. That's what strong financial systems do. They reduce mental clutter. They support better decisions. They help you lead your business with a calmer mind. We'll continue our discussion in a moment. First, a brief word from Georgia Peach Income Tax. Financial success creates opportunity, but it also creates complexity. Tax decisions affect more than forms. They affect your cash flow, your business, your peace of mind, and your long term financial future. That's why the Sweet Spot Tax podcast is powered by Georgia Peach Income Tax, strategic tax advisory, and IRS representation built for clarity. Whether you're planning ahead, facing an IRS notice, dealing with back taxes, organizing your business, or seeking a clearer path forward, Georgia Peach Income Tax helps you move from stress to strategy and from uncertainty to clarity. Visit www.georgiapeachtax.com to access tax calculators, educational resources, IRS tools, AI assisted insights, and practical guidance designed to help you make smarter financial decisions before money moves. If you're looking for strategic tax advisory, IRS representation, or personalized support, call 229 395 3625. And if you'd like ongoing education, tax insights, live discussions, and access to everything from free resources to premium and VIP tax strategy experiences, join the Sweet Spot Tax community
on school, because the goal isn't simply filing a tax return. The goal is making better financial decisions with confidence. Visit www.georgiapeachtax.com, call 229-395-3625, or join the Sweet Spot Tax community on School Today. Georgia Peach Income Tax: protection, strategy, financial clarity.
Most people think deductions are about paying less tax. The real issue is understanding the true cost of earning income. That's the sweet spot shift. Paying less tax can be a result, but it should not be the only goal. If you only focus on paying less, you may start asking narrow questions. Can I write this off? Can I deduct this? Can I make this count? Those questions are common, but they are not always strategic. A better question is, what does this expense say about how my business creates value? That question changes everything. It moves you from chasing write offs to understanding operations. It moves you from tax time panic to year round strategy. It moves you from guessing to documenting. It moves you from short term savings to long term clarity. Most people think a deduction is valuable because it lowers taxable income. The real issue is that a deduction helps your business tell the truth. If you spent money to earn revenue, protect the business, serve clients, build systems, or create capacity, that cost belongs in the story. But not every dollar spent by a business owner is a business expense. That distinction is powerful. It protects you from two mistakes. The first mistake is under deducting. This happens when business owners leave legitimate deductions out because they're unsure, disorganized, or afraid. The second mistake is over deducting. This happens when business owners treat personal spending as business spending because they want a bigger write off. Both mistakes create distortion. One causes you to overpay, the other creates risk. The sweet spot is neither fear nor aggression. The sweet spot is clarity. You claim what is legitimate. You document what you claim. You connect deductions to business purpose. You use planning to make better decisions before money is spent. This is why deduction strategy is really business strategy. If your deductions are messy, your decision making may be messy. If your expenses are unclear, your profit may be unclear. If your profit is unclear, your growth decisions may be unclear. And if your growth decisions are unclear, success can become stressful instead of stable. The point is not to worship tax deductions. The point is to use them as a window into the health of the business. If today's discussion resonates with you, here are 6 practical actions you can take. Number 1, create a simple deduction system before tax season. Open a digital folder for the year. Create categories for operating expenses, vehicle use, home office, meals and travel, equipment, professional fees, insurance, owner level deductions, and more. As expenses happen, save the support. The system does not need to be complicated. It needs to be used. Number 2, separate business and personal spending. Use a dedicated business bank account and, when appropriate, a dedicated business credit card. This one habit can make your records cleaner, your bookkeeping easier, and your tax preparation less stressful. Number 3, stop waiting until the end of the year to figure out your deductions. Year end is often too late for the best decisions. By then, the money has already been spent. The records may be missing, and planning options may be limited. Review expenses monthly or quarterly so you can adjust while there's still time. Number 4, stop treating every purchase as a deduction just because you own a business. The expense should have a real business purpose. If it is mixed use, allocate it honestly. If it's personal, do not force it. A strong business does not need weak deductions. Number 5, use deductions to guide better business questions. Ask yourself, which expenses helped me earn money? Which expenses saved money? Which expenses created capacity? Which expenses were wasteful? Which expenses should I increase, reduce, or eliminate next year? That question turns tax preparation into business insight. Also consider this. Number 6, review strategic deductions before major decisions. Before buying equipment, changing your entity structure, funding retirement, claiming a home office, purchasing a vehicle, or making large year end purchases, get guidance. The timing, structure, and documentation can affect the outcome. Small steps matter. A receipt saved today may prevent confusion later. A mileage log updated today may protect a valuable deduction. A business account opened today may reduce hours of cleanup next year. A planning conversation today may help you make a smarter decision before money leaves the business. The goal is not perfection. The goal is progress toward cleaner, calmer, more strategic financial systems. We've spent today's episode discussing small business deductions, but perhaps the bigger lesson is not how many deductions you can claim. Perhaps the deeper lesson is how clearly you understand the business you're building. Deductions are not just tax items, they are clues. They show how your business operates. They show what you value. They show where money goes. They show whether your systems are reactive or intentional. They show whether you are guessing or leading. That matters because success without clarity can become heavy. A business can grow and still feel financially tight. Revenue can rise while peace decreases. Opportunities can increase while confidence declines. That often happens when the owner is making decisions without clean information. Tax strategy can help because it forces better questions. What is business and what is personal? What is necessary and what is wasteful? What supports revenue and what drains cash? What should be documented? What should be planned? What should be changed? These questions are not just about taxes, they are about leadership. A clear business gives its owner more than deductions, it gives the owner a better view, and a better view supports better decisions. The goal is not to collect write offs like trophies. The goal is to build a business where the numbers tell the truth. Because when the numbers tell the truth, you can price better, plan better, invest better, and lead better. You can stop reacting to tax season and start using tax strategy as part of your financial life. So here's the question to sit with. Are your deductions helping you understand your business more clearly, or are they simply a pile of expenses you hope will make sense later? That's today's clarity check. Thank you for listening to the Sweet Spot Tax Podcast. For more tools, resources, and strategic insights, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229-395-3625. Again, visit www.georgiapeachtax.com. Join the Sweet Spot Tax community on School or call 229-395-3625. Whether you're looking for tax strategy, IRS representation, or greater financial clarity, we're here to help. Georgia Peach Income Tax, protection, strategy, financial clarity. Until next time, align with your sweet spot and move with clarity.